Hey traders, happy Monday. Welcome to the weekly outlook. This is Chris Pulver. It is November 16th through the 20th. We're going to be talking about all things stocks, forex, cryptos, and this really sums it up pretty well with the decisions I'm making in the stock market, how I'm looking at risk on versus risk off. Are we going to see new highs? Are we going to see new lows? We're going to the charts. I'm looking at the SPY, the DIA, the QQQ. We had a big gap post-election in the U.S. markets, and we are trading inside of that right now. So we have the markets that are trying to get lifted up with COVID vaccine optimism. We have Pfizer in play. We have Eli Lilly in play. We now have Moderna in play. And again, can the markets build on this optimism? But at the same time, we've also seen some disconnect between, some value stocks and recovery stocks, as well as tech stocks. So, for example, COVID vaccine created big moves in Pfizer, of course, Moderna today, Eli Lilly last week. We started to see some really massive jumps in post-election gaps on Disney. We had Royal Caribbean, we had airlines, we had bank stocks. So meanwhile, you have tech stocks like Amazon pushing lower, Microsoft pushing lower, Apple pushing lower, Zoom, Peloton, these companies that have been, kind of pandemic friendly are starting to kind of come back to reality. So I look at this as there's a bit of a disconnect. I want to follow along closely. I think that we're kind of hanging in the balance with what's the next move to come. Typically and traditionally, we start to see a Santa Claus rally, which means once you get through Thanksgiving, we tend to see a lower volume drift. And this means that because there's less participants or less of a fight in the market, it tends to favor the path of least resistance. Now, since we had our bottoms back in March, one could argue that it's financially engineered because we started to cut rates in emergency measures. We have a Fed now, the central banks around the world, and the U.S. Fed is willing to stay very accommodative for the foreseeable future until things look better. And so it's kind of this like, hey, we're in trouble. Hey, we need a bailout. Hey, things are bad. Make sure it's okay. And I don't think that that's a good formula for sustainable highs. Now, understand that I'm going to show the charts. We're going to talk about the technicals. I'm not going to argue with new highs. If the markets want to go higher, I will be bullish, but it's cautiously bullish and it's protecting profits the entire time. So if I have decent trade opportunities that I take, I'm looking to protect those profits, make sure that I'm, tight on stops, gaining some profits, building that cash position, because I do think that if there's a larger direction to be playing out, I'm thinking that the reality is more favoring the bears. But please note and understand that I'm not nearly as bearish as I was earlier this year. So I'm going to continue to play volatility more so than calling the top in the stock market. But I do think that if we have another, very quick bear market, it's going to be ugly. It's going to be chaotic. But there's a lot of money to be made in a very short amount of time. So let's get to the charts. Let's show the technicals. How does this relate to risk on, risk off? Where are we at with the major indices? One big story in the background is cryptocurrencies. Bitcoin striking above 16,000. I mean, heck, are we going to close it? For 2020, can we get to 20 grand? That'd be pretty awesome. Last week's moves, the Dow Jones, again, this is all post-election, so we had a huge gap higher, and we stayed inside that Monday candle for the rest of the week. But the Dow Jones did gap higher. It was up over 4% for the week. The S&P was up over 2%. The NASDAQ was flat and actually finished negative at negative 0.55%. Bitcoin was up almost 3.5% at 16,287. We'll take a look at that today. So this is my question for the markets this week with the outlook. We have a busy economic calendar. I'll show that as well. But will we get above or below the post-election move? So let's talk about that. All right. So we'll get into the charts here. Please understand there's risk in trading. Please and always use trade capital only. Do not trade with money you cannot afford to lose. This is me. I'm Chris Pulver. If you're following me out there on social media, best way to follow me and get education like this, free education, free trading education, is to follow me on my YouTube channel. Make sure you subscribe, like the video. I appreciate the thumbs up, and click the notification bell so when videos like this go live and hit my YouTube channel, you get notified. Other platforms out there, you can search me on Facebook. Just type in my name, Twitter @PulverChris, and Instagram @Pulver.Chris. This is a video series where I said free education out there. Keep it seriously simple. Doing a ton of videos, and I have a couple more that I'll hopefully be finished up here in the next week or two. And I do take requests. In fact, my list continues to grow as people are asking me for, a video on this or subject matter on this or teach us about this. I will do that. So free education, like I said, subscribe to the YouTube channel. The best trading strategies, keep it seriously simple videos are alive and well. You can watch the whole list and many more to come on my YouTube channel. All right, let's get into the charts. All right, so here is the SPY, the ETF that follows the S&P 500. Let's go back a couple of weeks now. This was our low heading into the U.S. presidential election. There was a ton of uncertainty that entire week, but the market just decided to move higher. So we have major gaps to the upside, a big push all the way through the week. This is where we finished the election week. Even though there was no president decided, everything was still up in the air. We still don't have a current president that is acknowledging the electoral count. And we gapped higher. Now, this is the candle I'm talking about. Look at this candle. We gapped way higher, but we also started to drop back down. So this is what I'm watching this week. There is a risk on trade if we get above these highs. Now, even though I might be reluctant to say we're super bullish, I don't think it's worth fighting. In fact, if I'm going to take any buy trades based on risk appetite, and this could go to currencies as well, but let's talk stocks first. If the SPY goes higher and we start closing above 364, where do we go next? From 364, do we get to 370? Do we get to 380? Do we go to 400? Maybe. But it's basically just a closeout. If we close higher, do we sustain that run higher? If we don't, then I'm looking to see how we trade inside of this candle still. So perhaps in the near term this week, we might see a rejection off of this post-election gap high and come back down into 350. So for right now, this is what I'm watching. If we do not close above 364 and we do not close below 350, I'm essentially doing nothing. All right, and that's kind of my risk appetite. Now I'm watching Forex the same way. If we see the SPY closing higher, I do expect there to be some risk on trading. So Aussie should get stronger, CAD should be stronger, New Zealand dollar should be stronger, the pound is probably stronger if we see the SPY close higher. If we see the SPY close lower, then we're probably going to see dollar strength, Swiss franc strength, and Japanese yen strength. All right, so that's how these things have been correlating. It's been a really strong correlation year for risk on versus risk off trading, certainly in currency pairs and also in stocks. So if we start to also drop, if we break below 350 on this, expect the VIX to go higher. That's a volatility index, aka the fear gauge, but watching this level. So when we had this gap higher, I was short the SPY last week. That was a nice little intraday put. I bought some put options on the SPY. I bought some put options on the DIA. That worked out actually really, really nicely last week. Here we are again. This is the Dow Jones, the DIA ETF that follows the Dow Jones. We're sitting right back up at the highs. Same level. Are we going to break above 300 on the DIA? That would be equivalent to 30,000 actually on the Dow Jones. So we're trying. Look at this. We're pushing right up to it today. Are we going to break and close above 30,000? Is that a milestone where it's like, hooray, new territory? Or is that like, let's take some profit and then the Dow Jones retreats tomorrow? Watch this close at the end of the day. Watch, and I'd say give it 24 hours. If we close higher today, what do we do tomorrow? Do we close bearish tomorrow and come back inside? That's what I'm looking for. Watch these highs. So the DIA is at 299.57, and we're right there at the highs today. The lows, we had a fake out right at this previous low. And again, I'm watching this one post-election gap candle right there. So if we close below 291, I look for bearishness and higher volatility. If we close above 299, I'm looking for this cautiously bullish risk on trading. Okay. Meanwhile, you have the NASDAQ. The NASDAQ is in kind of even more range bound. We have the September swing from high to low. We did not take out recent highs. We did not take out recent lows. So there's still some upward movement available on the NASDAQ. However, why is this not as high, right? Why is the NASDAQ struggling? Why is big tech getting hit a little bit harder than other stocks? Maybe because big tech has actually benefited greatly from this kind of financially engineered recovery we had since April. Makes sense, right? So anyway, this is what I'm watching on the QQQ. Again, maybe cautiously bullish going into this week, but watching carefully. If I was going to be short on the QQQ, I would want to see price getting below 280, 250. If I'm long on the QQQ, you could take a chance on it right now and see if we get back to previous highs at 297. We have the high from September at 303. So it's very much short term in my opinion. Maybe the next 2 to 3 days, maybe this entire week if we're looking at directions, but it's essentially what's the close of the day given us for evidence, what confirmation do we have, and where do we follow along. Let's take a look at the volatility index. Big swing from these lows back in August. We had the high going in right before the election, and during that election week, as all the markets rallied, the VIX dropped a ton. Now again, I think that we're going to find some support here around $20 on the VIX, and we'll end up going back up. In fact, I remain long on the VIX. I remain long the VIXY as well, trying to take it back into some of these pockets. So if we see support at 20 bucks, I do expect the VIX to come up to like 34, possibly higher towards $40. And again, just look at this indecision. If we come down any lower, and we start building these major support levels off of $12 and $13, there's a lot of fantastic ways to trade these equal lows and all these consolidation lows. And then, once every 2 to 3 months, you get this big spike up, go from 12 to 22. You get like a, 75 to 100% move on these VIX plays if you get them nice and low. But we do have higher volatility going on right now. So look for some support around $20. Do we have a higher volatility week? And this is one thing we want to watch. If stocks are going to drop, if the indices are going to drop, we're going to see the VIX find some support and rally back up. All right. So I'm looking for that to kind of guide us for this week, watching this structure. So there's my September high to low. And then I used the post-election gap higher. I boxed in that swing, and this is what I'm waiting for. Do we break higher? Do we break lower? That is my weekly outlook for this week. That's going to determine, whether I'm cautiously bullish or I'm trying to be potentially short-term aggressively bearish. That's going to be the decision I make. Is where are we at? Do I buy some, do I buy some calls to take some bullish price action? Do I buy some puts to take some bearish price action? And look, see where I can make some cash this week in the stocks and in the major indices. Okay, when it comes to some of my currency pairs, there's some pretty good opportunities here. I am long on CAD Swiss. We got filled in my trading room around 69.70. Also 69.50 were levels we watched as well. That's working out so far pretty well. We're also long at 106.00, 106.10 on the Aussie New Zealand, looking to take it back up towards 108. I was actually looking for a sell opportunity on EURUSD, but that's essentially an inverse of my CAD Swiss. So I am long on the CAD Swiss, and I canceled my trade on EURUSD, but I do think EURUSD is going to continue to stay short. So we're just making lower highs, right? We have lower highs, lower highs, lower highs. Are we going to continue to go down towards lower lows? There's room on the EURUSD to come back into 5,100. We have massive pockets and gaps back here around 1.50. So this could be just a very slow move to the downside towards 5,100, maybe some great support around 1.50. Look at that beautiful resistance right there. That'd be future support. If we hit it, that's where I'd be bearish towards. Trying to be bearish now, selling highs, and then getting price into 5,100 to be safe. If we hit 5,000, that's destination achieved in my opinion, and then we start looking for longs once again. Euro Swiss, we keep hanging out at 1.08, a great move on it last week. Hopefully we will maintain this bullish posture. I still remain long on the Euro Swiss, targeting 110 and 110.45. Anything else? Euro dollar, lots of resistance at 1.20. I'm still looking for opportunities to short the euro dollar. We could look at a sell stop below 17.25 and try to take it down towards 1600. We could, take a chance at trying to sell it again at the highs at 1900 and take it down there. Major resistance at 1.20. Why am I looking at considering a short on the euro dollar? Because I still think the dollar index has some. Oh yeah, this didn't work last time. Fudge. I'll just find it in the watch list. DXY, where are you at? Dollar index, here it is. I still think the dollar index has some really good support. Okay, so equal lows, lower lows back in 2014, 2015, 2018. Scroll back. So this little breakout zone was in 2018, massive support all the way back to 2014, 2016. So are we going to form, higher lows now, maintain some range trading on the dollar index where we see some near-term dollar strength, or will this find some support, rally off it, break the support, find those 2018 gaps, and then rally up? But this is, again, a lot of indecision we're kind of judging the dollar on. But I think that if this stays in a range and we find support on the dollar index, that's why I'm also looking to sell that euro dollar nice and high. I want to take a look at the 10-year note. I've been telling traders here for the last couple of months, if the TNX, which is a 10-year note, if we get above 1%, that's a pretty good sign that there's recovery underway. Obviously this might affect some of the lending rates. I don't think the Fed's going to be changing their tone anytime soon, unless there's more of an optimistic recovery. But because of COVID vaccine optimism, we are seeing the 10-year notes going higher. If we get above 1%, I would think that we're going to see some dollar strength come back in as well. That's usually what I watch pretty closely is the 10-year note and compare that to the dollar index. Now, as this is drifting slightly higher, that's why I'm looking at some of that sustained support on the dollar index. So watch that TNX pretty closely. Take a look at gold. So XAU, man, why is this not working? Okay, so here's GLD. I'm actually going to look for XAU. There it is. So can we drop one more time? Like I would love to see after this big, dollar movement, this actually forced gold to go lower. I would love to see gold drop one more time. Like come into 1800, come back into 1750, and then I'm buying gold. So it's right here, equal lows around 1850. Again, this is kind of fingers crossed. Can we go lower on gold? If we do, between 1800 and 1750, I'm going to start buying gold once again. Silver, same thing. We have a nice little trend line structure on silver. If we can break down one more time, I would love, 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 love to see silver at $19.90. We'll just call it 20 bucks. If we drop to $20 on silver, I am buying like crazy. I'll buy at 20, I'll buy it at 16, and I'll buy it down here at 12. Those are big levels for me. That's long term. I will hold silver to get back up into the money. So if it's buy it at 20 and it runs back up to 29, good return. If I buy it at 20, I buy it at 16, I buy it at 12, and it runs back up to 29, even better return. So long term, I'm going to stay bullish on silver. Okay, oil, still hanging tough around the mid 40s. We have a lot of support around 36.50 and resistance at 41. Now, we're not breaking above, right? You see this resistance here around $42. If we break above $42, there might be room, there should be room up here towards 45. We also have room up into like 50 bucks. Now, oil's actually been very boring outside of this, just crushing futures price where oil was actually negative. And we've made a recovery. We're trying to stabilize. I think that's what the story is for the rest of the year is once we crashed to negative 30 cents and we started to rebalance, oil is now just about stability. So OPEC is involved, risk on, risk off's involved, the dollar's involved. But the way that this gets priced in, it's just very, very slow movement. And we're finding lots of ranges, lots of boring, I would say even volume is like almost non-existent. So the next big move for me is either staying inside this range and shorting oil around $42 and taking it down towards 36, or buying it at 36 and taking it back up, or wait for it to break out. If it breaks above 42, are we going to 50? If it breaks below 36, are we going to 30? Those are bigger moves that should be coming in oil. It's just a matter of waiting for it. So if you don't want to get into, the trenches and trade oil in the near term, then wait for those big breakout levels above 42 or below 36. Okay, anything else? Cryptos, here's Bitcoin making new runs on the day, 16.6. Keep on going. I know this is making a lot of people excited. It would be lovely to see. Look at this. This is now multiple weeks in a row. 1, 2, 3, 4, 5, 6, 7. We have 7 bullish weeks in a row. Looks like we are headed towards a 20K move. Now, understand that the market moves in waves and there's technicals. We could have this thing running up towards 19,000, 20,000 and see this thing crash right back down. So I am probably, with my little Bitcoin portfolio, I will be looking to take some house money and let it run. But I'm going to take some profit and actually get paid on holding this thing since I waited until, $5,000 to even buy Bitcoin back in 2019 and added to more positions in 2020. But this is an amazing run. There's more and more legitimacy coming towards cryptocurrencies, which is refreshing. I know that central banks around the world are talking about some adaptation of a cryptocurrency, whether or not it's Bitcoin or something else, we don't know. However, speculation-wise, this is looking fantastic. Are we going to hit 20,000? Is that another run to hit a top? Are we going to blow right through it? That I don't know. So what I'm going to do is I will probably take my initial investment with some gains, take that back, and then let the remainder run. So that way it's like I can't lose. Even if it goes from current 20,000 to 0, I at least took out my initial investment with some gains. So, maybe that's not the short-term way to play it. But certainly for me, it's like if this thing goes to 100K, I want to have some skin in the game. If it blows through 20,000 and keeps going, I want to keep some skin in the game. So kind of more of like, I keep calling it the millennial lottery, but it very well could be. So same thing on my others. I'm also in Ethereum, and this is right here. I'm also in Ethereum. We're trying to get back to the highs. If we make some fresh highs in Ethereum, there is, again, like 300% upside on Ethereum to get back to the 2020 highs. Why is it that Bitcoin can lead the way while the others are lagging behind? I don't know. But if we start to get to the highs from 2018 and Ethereum can run from 460 all the way to 1400, I'm glad I have money in Ethereum. Litecoin, if we can get back to $400 on Litecoin, we're at $70. I mean, come on, that's crazy, right? That would be what, 9 times? 70, no, 6 times, 600% upside. Ridiculous. Okay, so Ripple's another one. If we can break above 30 cents, Ripple's looking a little bit better. I would really love to see Ripple above 31 cents to see if the bulls are going to maintain some control. So it's a developing story in cryptocurrencies. I know that Bitcoin haters are hating the fact that Bitcoin enthusiasts are saying, look, this is the best yield of the markets. Gold's up 20%, but Bitcoin's up 80 to 90%. So call it fake, call it a bubble, but here it is. I mean, the proof is there. If you traded cryptocurrencies this year, it's been a good year, right? If you're in equities, so far the NASDAQ for the year is still positive, but barely clinging to it. I think we are basically flat in the S&P, maybe slightly higher because of that post-election gap. But it's been a rocky year. It's been a wild year. So that is why, to wrap up today's weekly outlook and prep for the week, this is what I'm watching. I'm watching this post-election gap. Okay, I'm watching that one single gap higher that closed bearish. Now, if we get above it, cautiously bullish. If we get below it, aggressively bearish, but not betting the farm. I will be basically looking at call options to be bullish, put options to be bearish, and trade accordingly. Dow Jones, same thing. Are we above it? We're right at the highs today. Do we close higher today? Do we sustain that close tomorrow? I'll probably give this another 24 hours. If we reject off this, maybe 30,000 is the destination and there's profit taking at 30,000. I don't know, but that's what I'll be looking for. So watching the structure very carefully. The NASDAQ has some room to run either direction. So I'm going to take my cue from the SPY and the DIA. I'm also watching the VIX. Do we form support, hold support at 20 bucks, start to rally back up towards 34? Obviously, if the VIX is going to rally, we're going to see some selling in the stock market. So it's very much a week rooted in risk on versus risk off. What I'd like to do also is take a look at the calendar for this week in Forex. Let's go to high impact news. It is a busy week. I do know that. So let's go to this week and do high impact only. And we'll see what we have lined up. Right now, again, this is the week before, so this is our last full trading week before Thanksgiving. So this full trading week, Monday through Friday. Next week, Wednesday, Thursday, Friday, things will be a lot lighter. U.S. markets will probably be closed. Banks will likely be closed. Forex market does remain open. That's one thing I usually look for trading during the holidays. Is the Forex market tends to drift. We start to see some pretty good trends. So that's a good time to leave some systems running, let some of those robots and automation strategies do their work because the path of least resistance, and we have some good low volume trends. So hopefully some decent established direction this week that we can go ahead and trade the continuations on next week. And if we establish those trends and continuations, we're likely going to take that into the end of the year. Like I said, path of least resistance is easier for the markets to do. Now, I think that we could try to sustain this for the rest of the year. I'm not saying we're going to. I need to be ready for the complete flip in direction as well. But if we're going to just keep pushing, keep grinding, the market takes good news, bad news, no news, and just keeps pushing markets higher, don't fight it. It's not worth fighting it if it's just going to keep staying irrational. Just know that we have to acknowledge that things might be irrational, but eventually reality sits in or sinks in. Okay, so busy week, kind of. We have OPEC meetings this week, so we'll be watching oil, retail sales for the U.S., couple announcements from the Reserve Bank of Australia, CPI news on the CAD, Aussie employment on Wednesday, non-farm on Thursday, and that's ADP non-farm for the CAD. I'm thinking, do we have anything else? Let me go medium impact and see if there's anything sprinkled in here. Thursday, unemployment claims for the U.S. I continue to watch those numbers very carefully. We've had, a solid like 700K, 800K. I know that certain parts of the country in the U.S. are starting to put back in some restrictions, and they're closing businesses again. So we might see another jump in unemployment claims this week. And then Friday, anything here? Lagarde speaking, core retail sales for the CAD, G20 meetings all weekend. Okay, so it's a watch, right? Like watch the stock market levels, watch and see where we're closing above or below that post-election gap. What currency pairs are we going to trade? Is it risk on versus risk off? I'll say it again. If we see risk on trading, which means the stock market should be pushing higher, volatility is going to go lower. Currency pairs that do well in that environment, the Aussie, the CAD, the New Zealand, and the pound. those four. Okay, risk off environment, stocks drop, volatility goes up. Currency pairs, dollar, yen, Swiss, they get stronger. All right. If it stays inside that range, if we have the SPY and the DIA staying inside those ranges and very tight indecision ranges this week, there's probably not going to be a lot of action outside of some range conditions. So prepare for that too. I have robots that do that, right? I've got Perfect Storm. I've got 2 robots that do that. Active Storm, Range Storm. They're killing it. It's ridiculous. So I love those running in the background. Meanwhile, make good decisions. I love dollar Swiss long. I love Euro Swiss long. I love Aussie New Zealand long. Those are my 3 big positions. I'm watching this week for some good setups. I'll see you this week in my trading room. I've been talking a lot. Have a great Monday. Have a great rest of the week. See you in my trading room. If you have any questions, let me know. Make sure you like the video. Subscribe to the channel, click the notification bell, send me some requests. If you have other videos you'd like me to do some education on, again, this is all free education for everybody out there to be more consistently profitable in any financial market. Okay, that's it. Chris Pulver over and out. Talk to you soon. Bye.